So today's webinar is with Phoenix Copper, and we've got Ryan McDermott, who is the CEO. He's based out in Idaho, and he's the guy who gets his hands dirty, and Richard Wilkins, who's the CFO. We're going to do this slightly differently to normal in that we're going to have a short presentation giving an overview of the company, and then a much longer chat stroke question and answer session than usual, because I had a feeling for this presentation. I think it's been borne out by the attendee poll that quite a lot of the attendees would know a lot about the company. So you can get deeper dives in terms of the introductory presentation. They are available online. So we're going to do a truncated one today, and then we'll have a deeper dive into the issues that that you guys want to find out more about afterwards. So without any further ado, it's my pleasure to hand over to, I think it's going to be Richard speaking first.
Great, thank you, Paul. Well, welcome everyone to Phoenix Copper. We are an emerging producer in the USA, and we're listed on London's AIM and trade on New York's OTC QX. I should draw your attention to our standard disclaimer. So we're focused on Idaho. We are developing the past-producing high-grade Empire copper mine. This was an underground mine with head grades of 6 to 8% copper, which closed when the workforce was conscripted into the Second World War. We're in a prolific mineralized district. Empire is the epicenter of 3 mineralized faults. Bingham Canyon, the giant copper mine, is only a 4-hour drive to the south of us. And in fact, our consultant geologist believes that we currently only understand and have explored perhaps 1% of the total ore system potential. We are initially focusing on a simple heap leach SXEW open pit mine above the historic deposit. The in situ value of the open pit measured and indicated resource alone is some $1.4 billion. But we're targeting production for late next year to produce copper and zinc with gold and silver to follow. This will generate cash to finance ongoing exploration and development of the greater ore system. Pre-production CapEx is likely to be in the order of $53 million. We anticipate net revenue of some $800 million over an initial 10-year operating life, with a cash operating cost of only $1.83 per pound. Life of mine EBITDA is looking at something like $310 million, and free cash in year one of $43 million, post-tax NPV of $105 million, and an IRR of 47%. But this is at $3.60 copper. At current metal prices, these numbers increase significantly. CapEx payback would be less than 1 year, and the post-tax NPV would increase to some $175 million and the IRR to 80%. We've recently submitted the plan of operations to the regulatory authorities for the first phase copper zinc project in preparation for final permitting. We're an experienced management team. We're committed to sustainable operations. We recently created a board-level ESG and sustainability committee. In fact, we announced that this morning. And subject to further test work, we're planning to process our precious metals using non-toxic, environmentally friendly ammonium thiosulfate rather than cyanide. We have fantastic exploration upside. Almost 30 square kilometers of mineralized claims at Empire, with numerous historic mines and workings scattered throughout the area, plus 2 cobalt properties on the Idaho Cobalt Belt to the north of Empire. And we've recently agreed an earn-in arrangement with First Cobalt on one of those. Next slide, please. So here we are in Idaho. Empire in Custer County next to the town of Mackay, and the cobalt properties to the north in Lemhi County. Excellent infrastructure. Idaho is a pro-mining resource-based economy and has the lowest perceived mining investment risk in the world, according to the Mining Journal Risk Report. So it's a great location and jurisdiction, and we have the full support of the local community in the town of Mackay. As mentioned, we are committed to ESG and sustainability. We have appointed an ESG coordinator, Lenny Wilkie. She is based in Mackay, and she will liaise closely with our recently created ESG and Sustainability Committee. We've completed environmental baseline studies on both Empire and Red Star, with no critical issues identified. We look forward to supporting a green economy and delivering copper and other relevant metals into the global transition to clean energy. On the corporate front, our current market cap is just over £50 million, 116 million shares in issue, 134 million fully diluted. We have a loyal and supportive shareholder base, a good mix of high net worth retail and increasingly institutional shareholders. Directors own approximately 5.5%, and we're actively looking to expand our trading and shareholder base in the US. We have 3 executive directors, 4 non-executive, 2 of whom are independent, plus an advisory board and, of course, senior management on site. Between us all, a great combination of professional, mining, technical, financial, and corporate expertise. So what are our plans for the rest of this year? Well, we completed an £18 million oversubscribed financing in March, so we have sufficient cash to cover operational and corporate costs well into 2023, including exploration programs for both this year and next. We plan to finance construction of the open pit with debt, so we are not currently planning any more equity issues. Apart from ongoing pre-construction feasibility engineering and design for the open pit, we've recently completed a number of magnetic surveys, the results of which are currently being analyzed and interpreted and will help us identify drill targets. And then this summer, we will be drilling the high-grade underground copper sulfides, lead and silver at Red Star and Horseshoe, and gold at Navarre Creek. This represents an aggressive multi-metal drilling program, which will provide plenty of news flow, and we believe will be game-changing for our resource base, future growth, and market value. So all in all, we think it's going to be a very exciting second half of the year. Thank you.
Thanks, Richard. Well, let's provide everybody some detail on each of the projects that we currently have in the portfolio, starting with our flagship operation, which is the Empire Open Pit. As Richard mentioned, we just submitted a plan of operations to the Bureau of Land Management to start the permitting process on the Empire Open Pit. That's an open pit copper oxide deposit. We have over 400 drill holes in that deposit, resource of nearly 23 million metric tons at about 0.5% copper. We're currently, in addition to the plan of operations, we're currently working on completing the feasibility study on the oxide copper, with a plan to have that feasibility done in the September to October timeframe this year. All of the environmental baseline studies have been completed in that area, So really it's just head down and moving through the plan of operations and the feasibility study. The second project to mention would be what we call the Empire Deep Sulfides. The oxide deposit was fed by a series of sulfide veins. These were high grade. They were mined extensively from the turn of the century until the beginning of World War II. Copper sulfide veins, mostly with reported 6 to 8% copper. We are currently drilling the first hole of the deep sulfide program as we speak. That particular hole is planned for 800 feet. We're about 450 feet deep today, and we should have some assay information and photographs to issue here later in the summer. Just north of the Empire open pit and the deep sulfide project is the Red Star, White Knob, Bluebird, and Horseshoe area. We believe that these are basically a manifestation, surface manifestation of the deeper sulfide. That is, sulfide veins that are occurring nearer the surface, likely due to being upfaulted next to the Empire block. In 2018, we drilled a small inferred resource at Red Star, small in terms of tons, just a bit over 100,000 tons, but some pretty robust grades. As you can see there on the slide, 173 grams per ton silver, 3% lead, copper, zinc, and gold as well. We saw intercepts as we reported in that drilling exceeding 1,000 grams per ton silver and exceeding 20% lead over 5-foot intervals. We will be following up with additional Red Star drilling this summer. We're going to use a magnetic survey, which we've completed in the field, but are waiting for interpretation as a targeting tool for additional holes in that area. And the same goes for White Knob, Bluebird, and Horseshoe. We ran our geophysical survey, our mag survey over that area, waiting for interpretation again, which we anticipate will be done in 2 to 3 weeks, at which point we will issue some news on that and target those holes. We have a permit from the Forest Service for drilling at White Knob, Bluebird, and Horseshoe for 26 drill sites containing 29 holes in 2021. We should be finished with that project perhaps in October, certainly before the snow flies. Last but not least is Navarre Creek. The Navarre Creek project is located northwest of Empire, about 4 miles. It resides in a volcanic terrain that's juxtaposed against the Paleozoics of the Empire block. And what we see on the surface and through surface sampling that we've completed in the past, it's very similar to a disseminated volcanic hosted deposits like we see in northern Nevada. Low grade gold, but rather high volume. Classic epithermal alteration, quartz veining, lots of well-developed clay alteration. So everything that you would expect to see in that type of deposit. And then last but not least, and not mentioned on this slide, are cobalt projects. The cobalt projects are located 110 miles north of Empire in the Idaho Cobalt Belt. The Idaho Cobalt Belt is a historically prolific cobalt region, very unique in that it's really the only significant cobalt region in the States. We have two projects, Red Castle and Bighorn. We just recently signed an earn-in agreement with First Cobalt Corporation on the Red Castle property. That property directly adjoins First Cobalt's Iron Creek mine. And then the second project would be Bighorn. That's 25 miles to the north of Red Star. And that project directly adjoins New World Resources to the west. So that's basically a breakdown of the projects we have ongoing. Multiple drilling projects this summer, plus the plan of operations and feasibility study on the open pit. So we're quite busy and looking forward to having lots of news flow as we receive assay results.
Okay, well, thank you very much, Ryan and Richard. That was a quick run through of the highlights of Phoenix Copper. The thing that I guess I struggled with for a while to understand as a non-geologist is why this apparently fantastic resource had been allowed to not be mined from the Second World War onwards. And that's something that you know, a couple of the people that I've suggested they have a look at Phoenix Copper, they sort of say, well, you know, how is this possible? So I don't know whether you want to answer that question. Is there something about the complex geology of it, the way that technology has changed since, perhaps just the atmosphere in Idaho and the sort of things people were looking to mine? What's the reason for that?
Yeah, I can answer that for you. Prior to World War II, the mining focused on sulfide copper. There was a smelter on site, and smelting at that time was really the only technology that existed for recovering copper. Since that time, and really kind of late 1960s, 1970s, solution extraction, electrowinning, which is the SXEW we talk about, came into being, and it made it possible to recover copper oxide mineralization, particularly lower grade copper oxide mineralization. That takes a favorable copper price, and it takes a company that has the resources necessary to drill that deposit off in its entirety, which is what we've done. When we acquired this project, there were a little bit over 200 drill holes. In order to completely drill this off and develop a resource that would be economic for SXEW, you know, we've had to drill another 150 or 200 holes and spend a significant amount of time on resource development and engineering to get to that point. The property up till we took it over in 2016 just did not, it was not exposed to that combination of factors. So
you must know pretty well the makeup of the oxide resource. I mean, there's about 450 holes, isn't there, feeding into information? You must know it like the back of your hand, must feel.
Yes, we do. And that deposit is, for all practical purposes, completely drilled off. It's about 150 foot or 50 meter offsets on the drilling, which is equal to the variogram distance in the modeling. So we have a very, very clear picture of the oxide deposit.
Right. Now, we've got a question from Mark Bentley. Now, I know Mark well. He's a director of ShareSoc, and he is very knowledgeable in the mining area. If you can persuade him to invest, you'll have done a very good job. He wants to know about the capex for the planned mine. That I think we said 53 million for the original one, and sort of roughly how that breaks down. It's a heap leach project, isn't it? So presumably actually physically digging a hole and trucking the ore onto the pads, etc., is going to be most of the money, is it?
Yeah, so the process as we outlined it in the original PEA is simply open pit mine, crush and place on a pad, apply sulfuric acid, run it through SXEW. We have moved on with the project with a significant amount of engineering that I mentioned before to where we're into feasibility stage now. So we have issued the cash flow. It's on our website from the previous PEA. I want to move through the feasibility now and focus on what we're going to find in feasibility.
Okay. But obviously, you're pretty confident with that 53 million figure. That's, you know, that's something Richard said that you're sort of standing by as valid as of today.
That is the number that we calculated.
Now, you put in your plan of operations, obviously last week, I think, or the week before. Does that just cover the initial oxide mine, or does it go on to cover what you might be wanting to do with gold and silver in years 4 onwards on the site?
The plan of operations covers the open pit, the haulage routes between the open pit and the process area, the leach pad, and the footprint of the leach pad and the SXEW, the various processes.
Right. Does it go on to cover what you might want to do subsequently, or is that something that would be further dialogue needed with the authorities?
It covers the active footprint for everything.
Okay, good. That's clear then. So let me just see. We've had one of the questions that people asked is that the lack of a listing at the moment in the US, and whether there's anything, you know, whether there's an easy route in for US investors. So I don't know whether that's anything that you know that you're looking at the moment.
Well, I can answer that, Paul. We're trading on OTCQX, but we're not trading a great volume. And that's partially because we are still a penny stock in the eyes of most US broker dealers, and we don't trade electronically in the US. So most of the US activity is in actual fact taking place on AIM in Crest and isn't being reported through OTCQX anyway. So what you see on OTCQX is probably not representative to the actual US volume that's really going on. But we obviously would like to make it easier for US investors to trade our stock. And I think it's in our interest to do that. Now, a US listing, that's a different kettle of fish. I mean, that would involve NASDAQ or whatever, which comes with all sorts of SEC regulatory compliance rules and regulations, which we're absolutely not scared of at all, but probably not ready to embrace all of that just yet. I think that can follow when the company's in production and we've grown up a bit more, let's put it that way. But what we are working on right now, and I'm happy to say this, is that we are working on a scheme to improve the tradability of our shares on OTCQX and the appeal of our shares to the serious US investors. So watch this space. I hope we'll make some announcements on that in the not too distant future.
Right. And I guess that there's another question that that have been asked, which is going to be one for you, Richard, which is obviously the key to unlocking the whole project, really, which is how do you propose to finance the proposed capex for the project? What are the options open there?
Well, there are all sorts of options, but we are planning to finance it with debt. Debt can come in many different forms: traditional bank finance, specialized mine finance, off-take agreements, streaming agreements, redeemable preference shares, you name it. We have some pretty big organizations in our data room right now. Looking at the data, we're not short of people who have already come forward and expressed a serious interest in financing this mine. I mean, we're going to be producing, copper in Idaho. It's an attractive proposition. So I don't really think that it's going to be an issue financing the mine. I think it's going to be more a question of cost of capital and careful sort of evaluation of all the opportunities and possibilities and ways of doing it. But again, we've only just filed the plan of operations. Ryan and team are now working, flat out to upgrade everything to a definitive feasibility study, if you like. And really on the back of that, we can start serious conversations with third-party financiers. So we hope to be doing that by the end of October. But in the meantime, we've got a lot of irons in the fire, and we're sort of whetting people's appetites, and we're quite active.
Because it was obviously it was a significant equity placing that you had earlier this year, and obviously, you know, that has pros and cons, but one of the benefits is that it certainly gives you a bit of firepower. It's not something that you know, you're not going to run out of money, as you explained earlier.
We're not going to run out of money, and what it also does, it means that if a third-party debt financier insisted that we put more equity into the project, we've got it. And in fact, I mean, we will be spending some of the money we'll be spending this summer will actually go against that $53 million capex anyway, because there's stuff that we can get on with now on the patented land, and it's valuable. So you could say we're starting the construction finance sort of sooner rather than later, because some of what Ryan and the team will be doing this summer will come off that 53 million.
And in terms of the plan of operation and how the permitting, how it actually, the formality of it goes ahead, is it a form of dialogue that goes on between you and the authorities over the next year, with them asking questions? Obviously, things probably have to go out to statutory consultation to interested parties, etc. Probably have, as we do with any sort of planning thing in the UK, I imagine they have a period where they can respond, etc. But is it a process of a dialogue that really goes on, is my question, or is it now, you know, or is it just a question of waiting and seeing?
No. There's quite a lot of communication during the process between the regulators and ourselves. And as you said, it's question and answer, really.
Okay, that's good.
They are currently reviewing the plan of operations, and I'm sure they're making a list of questions that they have generated from all of the work that we've completed up to this point, just to make sure that all the bases are covered.
Fantastic. Now, I've got a question here, which in a sense enables you to talk a little bit more about the geology and the potential size of the resource, which is, it's a very simple question, but it doesn't have a simple answer, which is, what is the copper ore body percentage?
The copper ore body percentage.
I think he's getting at, you know, what percentage of copper are you pulling out of the rock? And I guess it's a very different answer for the oxide compared to the sulfide. And I assume we're talking about Empire here.
Yeah, well, really all we can speak to right now is the Empire oxide deposit, because that's the deposit that we have the majority of the information on. And if you look at the 43101 compliant resource that we published, that's just shy of 23 million metric tons, and right about 0.5% copper, just under 0.5% copper.
Yeah. Now,
copper forms the majority.
Might not sound.
Copper forms the majority of the, or will form the majority of the revenue from the open pit.
Yes, I mean, I was saying for some people that 0.5% might not sound that high, but I presented a close neighbour of yours just over the border in British Columbia to ShareSoc members a couple of weeks ago, to Seco Mines, and they were doing very, very well, getting 0.25% resource. So it's you know, if you've got your set up to deal with what you're pulling out, all arranged properly, then that's a, you know, a nice resource to have. And then the deep sulfides is a, you know, question of, I mean, it could be very good. Obviously, the historic grades that were being pulled out were exceptional, and presumably the aim of drilling this summer is to try and find out more from a modern perspective.
Well, the idea of drilling this summer is to define a geometry of those sulfide veins in 3 dimensions. And
exploiting those, the deep sulfide, if we assume that it is, you know, a reasonably sized commercially exploitable opportunity, that is in terms of the sort of quantum of you know, facilities and funding that you would require. That's something of a different scale altogether, isn't it, to the open pit? I mean, that would be a big job.
It is a separate project.
Yeah. On the subject of separate projects, then, how far advanced is the Red Star project?
Sure.
And I was just going to ask, there was just a sort of follow-up, which is, you know, depending on how processing, what it looks like, would it be possible to use some of the Empire processing facilities to process the resource from Red Star? And I guess that ties into, just in general, that, you know, you've got a lot of resources in a mountainous but relatively compact area, and to what degree will you, in the fullness of time, be able to, you know, use common production facilities for resources from different parts of the area? Is that something that's going to happen or not?
Well, that's a good question. What we know of Red Star from the drilling information that we have is that it's a sulfide deposit versus oxide. So in terms of the process facility for the Empire oxide, it really will not be usable for Red Star. Red Star would be, if it's a classic high-grade, narrow vein sulfide system with an economic geometry, would very likely require a crush grind flotation milling scenario. The assets that we can share between the projects would, of course, be power, electricity, haulage routes because of the proximity of the Empire open pit to Red Star. And Red Star resides on the patented piece of property, the patented Empire property that we own. There's advantages to that in that there's much less permitting required when you mine underground on patented land. So there will be some sharing. And then, of course, all of the assets we have in the town of Mackay, which is 4 miles away, office, staff base, all of the support that we have in town will certainly apply directly to Red Star as it does to Empire. But different processing scenario.
Right. I mean, how far advanced can you go with, or are you planning to go with construction on the patented land whilst the permitting's going on? Are you going to wait for the full permitting approval to happen before you really start work, or because there are different levels of freedom granted to you, aren't there, in terms of what you can do on patented compared to unpatented land?
Yep, we are going to do some work on the patented land, and that work will be based on consultation with the current regulatory authority and make sure that any work that we do is compliant with the current plan of operations.
Okay. So we got a question today, probably prompted by the RNS this morning about ESG, and just asking what activities have you got planned in terms of the local community in Mackay? I mean, are jobs going to be for locals first, etc. is the question.
Yeah.
I imagine there aren't enough people in Mackay to fill all the jobs you're going to create.
Well, so the socioeconomic studies that we've done to date indicate that we might be able to draw a third of the required workforce from Custer County. Mackay's a very small town. We will be hiring local as much as possible. However, you know, within a town of 450 people, perhaps a third are retirees. 15 or 20% are under the age of 18, so they couldn't work with us. And of the demographic that's left, most of those people have jobs. So we certainly will be hiring locally first, and that would be from Mackay, then expand that to Custer County. and then expand that to other areas of Idaho, northern Nevada. There is a very experienced, obviously experienced mining base in northern Nevada that we believe we can draw from. So how that relates to ESG. ESG is a great program. In the United States, a good share of ESG is covered through existing statutes and laws. Say worker safety, for instance, is regulated by the government agency MSHA, Mine Safety and Health Administration. We have labor laws that limit, the age of employees. In fact, it's 18 in mining. So we're not going to have problems with child labor, things like that. Really what our ESG program, I think, is going to focus on, at least locally, is community development and community planning. And we're going to have to go through quite a lot of planning to prepare a community the size of Mackay for that influx of employees and those employees' families. And we are doing that as we speak.
And on the environmental side, of course, that's something that you're going to have covered in great depth for the permitting application. But one of the key things was that there's no water outflows are there from the site. That it's a pretty clean application in terms of the environmental risks that is posed. It
is. The Empire site is, of course, a brownfield site. There was significant mining there, as we've mentioned, prior to World War II. In 2004, Idaho Department of Environmental Quality conducted a site-wide environmental assessment, and they really found no significant environmental issues as legacy issues from the previous operations. That, coupled with the fact that we don't see groundwater on the site, so we'll have a dry pit. We don't have any surface water to speak of on site. So that's a big advantage to us. And any drainage off of the mine hill that would occur would drain into the Lost River Valley. We would control that, but the Lost River Valley doesn't have a direct connection to the Pacific Ocean. So salmon and steelhead and anadromous fish, which is usually quite a hot topic when it comes to permitting in Idaho, is not an issue because there's no route for those fish to get from the ocean to Mackay.
I understand you're quite a keen fisherman, Ryan. So the last thing you'd want to be doing is causing any pollution, I'm sure.
That's right.
Yeah, this is fair enough. What's going to be the end product for the open pit? Is it going to be copper metal or copper concentrate?
Copper cathode.
Okay. Easily said and done. Now, last year when we were talking, there were quite a lot of drill results came out with, really quite high grade gold and silver with near the surface on the Empire pit. Is that something that you're able to tell us a little bit about? That they were quite eye-catching grades, weren't they? At quite shallow depths.
Yeah, they are eye-catching grades, and as we've been pretty clear about, we're conducting extensive metallurgical test work to figure out the best, most economically viable way to extract precious metals from the deposit, and that test work is underway right now.
But you're going to have, in a sense, the leftovers of what you process. I mean, it's just a mixture of a lot of good stuff, isn't it? So
it is, and it's up to us to find the most economic way to extract those.
So this isn't probably the right question for the moment, where I imagine you are sweltering in Idaho, but how in general does the weather impact the operations there? Because you've got pretty extreme winters, don't you?
We have extreme winters, we have hot summers, but keep in mind there are mining operations around the world that mine in the hottest deserts in the world and north of the Arctic Circle. So big equipment and good planning can overcome inclement weather.
Right. So One thing that I don't think we've spoken about before is the advisory board that was recently. Well, actually, the new directors, the new people that have come on board recently. So we've had Catherine and Harry coming on with different skills in different areas. Do you want to say a little bit about their background, probably more for Richard, or well, could be you, Ryan, if you want, and what they're going to bring? Because they come, well, Catherine's background was with Fundsmith, which is huge fund where she helped set up and do the pitch that to institutions very successfully, and Harry's been involved with a number and continues to be involved with a number of mining giants. I mean, they're good caliber people for a company with such a small market cap, one would say.
Well, we're delighted to have both of them on board, and Kathy's really excited in particular to sort of lead the ESG charge, if you like. So she's now the chairman of our new committee, and we're conscious that we want to tick as many boxes as we can with as many institutions as we can, and I hope Kathy's going to help us very much in that regard. As we had a board meeting yesterday, and she contributed excellently, as did Harry. I think Harry's involvement really speaks for the quality of the deposit. Harry is definitely excited about the potential of the geology in that whole region, that what we're sitting on. And as you say, with Harry's sort of big company background, Rio Tinto and the rest of it, we're honoured to have him. So I think it speaks for itself that we may be a relatively small AIM-listed emerging producer, but I think some people are seeing some potentially great things going forward.
Yes, well, let's hope so. In terms then of looking forward, what can we look forward to, I guess, A, this summer, and then B, in terms of where you think this company could be in a year, 2 years' time? Because there's a lot going on, isn't there, at the moment?
Well, there is a lot going on. As far as this summer, of course, we're going to have assay results from drilling at Red Star, drilling at Horseshoe, Bluebird, White Knob, drilling at Navarre Creek. We'll have the results of the magnetic survey that we've completed at Red Star and Navarre Creek. We will provide updates on the plan of operations and how that's moving forward. Later this fall, we'll obviously have feasibility study information out, as well as metallurgical information that we'll be releasing. So yeah, we are busy.
And corporately, as I mentioned, we'll be looking at the US side of things, and of course financing the mine with debt later this year, all being well.
Well, lots to look forward to. And I guess just had a question here, which I think is probably one on a few people's mind, which is, what is the end game here? Because are all of the resources that you have going to be capable of being commercially exploited by you, or will you be looking to partner up any of them or sell any of them off at any point?
Well, let's be clear, the resource that we currently have that's exploitable is the open pit oxide. Everything else we talk about is in an exploration phase.
And I guess the whole model is based on getting into cash flow positive territory as soon as possible, so that you can decide what you want to do next.
Yes, and fund it with internally generated cash flow, all being well, without having to keep going back to shareholders. In fact, I'm hoping that we'll be handing money back to shareholders rather than asking them for more.
Very good. People always like to hear that. I hope you can hear me, actually. I keep on getting a sign up saying that my internet connection is unstable, which is unusual when my children aren't watching Netflix. But we've had a question here from Jason's asking, when are you expecting early results on the deep sulfide drills? How long is that going to take? You're 450 foot deep into them. So what will the process be? That can you physically see when you've come to the end of the sulfides?
Yeah, well, so we're drilling core, HQ diameter core, for the deep sulfide program. So our geologists will be able to identify the presence of copper sulfide minerals as the core is extracted from the drill. What they cannot do is estimate the grade. Obviously, that's done in the laboratory. So the process that we go by, and it's an industry standard process, the hole's drilled, the core is extracted on a daily basis. Our geologists log the core, they split it, actually cut it in half with a saw. One half of the core is shipped to the lab. The laboratory preps it and runs it through an assay process and reports the results to us. As a result of COVID and various staffing challenges in the US, from the time we submit core to the lab for prep and assay, we're not going to expect results back for about 7 weeks.
But you can tell just by sight, if you're an experienced driller, where the sulfide ends and something else begins, can you?
An experienced geologist, yeah, for sure. We'll know if we're in the sulfide zone. But again, we don't know what the assay results are until they go through a lab.
No, and presumably well, I don't know, you tell me, is it a uniform mass porphyry? I mean, it's big, isn't it? Because this is what we're talking about, isn't it? Is a tungsten, is it a tungsten porphyry sulfide mass here? So is it generally a uniform sort of concentration of copper throughout, or even within that, is there different concentrations as you go through it?
Yeah, so we have evidence that suggests that the source of the metal is a molybdenum tungsten porphyry. We haven't drilled into that porphyry, but we've seen evidence of that in the old underground workings. There's also lots of geological characteristics that are common in porphyry environments. And if anyone wants to take the time to read Nigel Maughan's report, which we have on our website, that details very specifically the geological characteristics that are found in porphyries and that have been identified at Empire. As far as the dissemination or distribution of copper from that porphyry, in this particular system, we have a very well-developed skarn. That skarn sits elevationally quite a distance above the porphyry. The formation of that skarn is simply a chemical interaction with fluids from the porphyry into a limestone. And the result is formation of copper minerals that started as sulfide, interaction with meteoric water and perhaps some groundwater, oxidized those sulfide minerals and created the oxide halo that's currently the Empire open pit, the oxide open pit. Copper mineralization is not disseminated in a big circle around this porphyry ball. The best way to envision it would be a tree growing perhaps out of the porphyry body, and the branches of that tree would be the sulfide veins. And then as the tree opens up, or think of it as a flower, as it blossoms near surface, that's the oxide portion of the deposit.
Okay.
But that occurs in isolated areas due mostly to porosity and permeability. Fluids like to travel through an open pathway. The best pathways geologically are faults, fractures, and folds. So associated with the porphyry in areas where we have good structural preparation of the overlying rocks, that's where we see the mineralization.
And that's presumably why around the world, you tend to get copper in mountainous zones, where there are lots of faults, lots of geology going on.
Yep, that's a factual statement for sure.
Yeah. So you talk about Nigel's report on your website, and that's certainly something that people should go and look at. There's also I know you've had Hardman's have produced reports as well, and I was seeing today there's one by an outfit, Hallgarten, which I don't know if that's on your website or not, but it's certainly available. And I understand Pamela Gordon are working on a note as well. Is that correct, Richard?
Yes, yeah. Well, we've appointed Pamela Gordon as a joint broker, and their analysts are working on initiating the research cover sort of as we speak.
Yeah. So, well, is that going to be what I mean? It's one of the banes of our lives as retail investors is sometimes getting our hands on these reports. Is that one that's likely to be available to shareholders, or one that you'd have to be a client of Pamela to get hold of? Do you know?
I'm not actually sure, but I hope we'll be able to put it on our website.
Yes. Well, I think we all hope as well. But there's certainly so there are a couple there at the moment. So in terms of I'm just looking at questions then. So someone's asking, can you provide a summary of milestones to production? I mean, we're talking about production late 2022. So what's going to? I think you sort of have covered a lot of that. I mean, it's presumably it's financing, feasibility study. This is testing whether I was paying attention. Financing, feasibility study, and getting the formal permitting through, I guess, are the three biggest ones, aren't they?
Probably switching around the first two, yes. Fine.
Okay. The same question is asking whether we can have a dividend offer in writing. I think he's being... But I think, it would open up the company to a lot of... a much bigger class of investors, obviously, that the people in the UK, Ryan won't understand this, people in the UK just love dividends. I know in America you're all after growth. But,
well, we're after both here.
Both is best. So we've had a question, I think we tried to answer it earlier, but I mean, if we can get anything more on this, and I know there's limits to what you can say because a lot of it is down to the plan of operation, etc. But just Andrew's asked whether we can explain more about how the 53 million capex cost was calculated. I'm not sure if that's in any of the reports that are available on the website, or whether it's something that could be answered now.
It is available on the website, and it's broken down into enough detail, essentially parts and pieces, to be to provide enough information to anybody.
Okay, and then Jeff asks, he's had a lot of technical information, which sounds very impressive, good man, but can you offer a simple story which covers your vision of the company going forward? In short, why should I invest?
We have a viable resource in a very pro-mining safe jurisdiction, the United States, Idaho in particular. We have an exceptional team, both at the corporate level and local level, and we've all done this before.
Yeah, I mean that. I was thinking you're in the right place, and you're saying you've got the right people. I mean, do you want to just say in the last couple of minutes a little bit about your experience, Ryan? I mean, you've got a great story to tell there, but Richard as well. Just a little bit about why you are the people to deliver this project.
Go ahead, Richard.
Well, I think, as most of you know, I was involved with Oxus Gold. We were in Central Asia, a fantastic area of the world, but it proved very, very difficult to operate there. We thought we'd cracked it, and we got the gold project into production in Uzbekistan, and we produced quite a lot of gold and silver, and then came unstuck with the authorities for one reason or another, and it all ended up sadly in international arbitration. I lost quite a lot of money, and I know some of my fellow shareholders did as well. And having said that, quite a few people made a lot of money because we took Oxus from 0 to £500 million market cap, I think, at one time on AIM. So we decided to do it again, but to go to a first world jurisdiction where we're not likely to have the project meddled with, where we don't have to enter into joint ventures with government. And we've landed on our feet in Idaho, which is a fantastic jurisdiction. And as I mentioned, the Mining Journal, in its risk report, Idaho is perceived as one of the best places to be in the world. So I hope we're going to do this again and take this company to a very significant sort of $1 billion mark at some point in time. And I don't expect the American government to come in and try and take it away.
And Ryan, I mean, your grandfather, was it, or great-grandfather was actually in the Empire mine. Is that right, before it was closed down?
Both my great-grandfather and my grandfather mucked ore at the Empire. My great-grandfather in the early 1930s, my grandfather just prior to World War II, before he enlisted in the service. Yeah,
and I mean, that must be, being a local boy, etc. I mean, it's not something that that people can give you ESG points for, but it really does feel right, doesn't it? I mean, it changes the nature of the project as far as the locals perceive it, that it's not something that just outsiders coming in, it's something that has that historic integrity.
Well, it does, and this is my home. So we're gonna do this the right way.
Fantastic. Well, listen, it's been great chat. So I'm just going to throw one thing out there, because it just showed the difference of opinion. Someone had said, please no dividends, return of capital or other, please. But obviously, different investors want different things, and some people want growth, other people want dividends. But yeah, thanks for that comment, Charlie. Hopefully, you'll get enough of both growth and dividends to satisfy everyone. Actually, just before I wrap up, there's one question which has been there for a while, which the guy called Jason asked, which I haven't had the opportunity to pose yet, which is just going after institutional and potentially American investors and not planning to issue further equity. Are you a little bit concerned about whether there are enough shares, whether there's sufficient liquidity, or is that something that you've not thought too much about yet?
Well, I think we've got a reasonable amount of liquidity at the moment on the AIM market, and we are going to do our best to increase the liquidity on the OTCQX. I don't think we have to issue more shares to achieve that. I mean, fully diluted, we'd have about 134 million shares in issue, and hopefully that's enough.
Well, if people want them, they might have to just pay for them.
If they want them, they'll have to pay a bit more for them.
Okay, well, that, I think, just about winds up our hour. So thank you very much, Richard and Ryan, for your time. That was certainly full of information, and I would urge people to go out and have a look at some of the more information that's out there,